Special purpose acquisition companies, otherwise known as SPACs, have been getting a lot of attention lately with their activity in the market. Yesterday, Solid Power, a maker of solid-state batteries backed by Ford and BMW, secured a merger with a special purpose acquisition company called Decarbonization Plus, worth about $1.2 billion. And just a day before, online grocery retailer Boxed announced that it's going public in an $887 million deal with a SPAC called Seven Oaks Acquisition Corporation. And the popularity of SPACs has been growing as investors continue to show interest in companies that use blank check mergers with SPACs to go public. However, some experts say that SPACs are just having a moment after having a relatively calm corner of the marketplace and may lead to a downturn in the future. So are SPACs something that individual investors should consider looking into? Well, joining us now is Mr. Brendan Caldwell, Director of Caldwell Securities Ltd. Brendan, welcome back to Forum Daily.
Glad to be here, Nima.
So let's start with what exactly SPACs, or special purpose acquisition companies, are.
Well, they are a way for private companies. I guess I'm describing what they do. They're a way for private companies to become public companies, and it's a way for investors that don't otherwise have access to private companies to invest at them pre-initial public offering, pre-IPO. In fact, it doesn't use the traditional initial public offering system where a company issues public stock, having been a private company becomes a public company. This is a backwards way of doing it, where the money is raised by an entity that says, give us your money and we will figure out a good investment, maybe in a particular area, maybe in a very broad general area, but we're going to figure out a good investment, a good way to put your money to use. So it's a way for investors to buy private companies before they're public. It's a way for private companies to become public, perhaps easier, perhaps in a different way.
And SPACs are also referred to as blank check companies. So can you give us a background into why they're named this and what a blank check mergers exactly are?
Well, they are and they aren't, in that if you hand somebody a blank check, it's usually very difficult to get it back. But with these SPACs, it's a little bit different in that the initial investor can get their investment back before the deal actually goes through. So it is a conditional investment in a entity that you don't know what they're going to end up investing in. Eventually, the investors get to approve or disapprove. But whether you approve or disapprove of the investment, you normally still can get your money back. So it's a very complicated blank check, but the reason for the name is that you're giving money to an entity and you don't know what that money is actually going to be invested in at the end of the day.
And considering that SPACs have been in the marketplace for decades, what is the reason behind their growing popularity right now, Brendan?
Well, I think the Americans have discovered them. Indeed, I think they'll say they invented them, like the telephone or basketball. I believe that they were a Canadian invention, and we've been actually using them in our marketplace for years. But it's been really caught on in America, I think, to answer pent-up investor demand to be able to participate in private markets, which have been the purview of the very rich. I'm a huge advocate of public markets because everybody gets to play. Private markets just mean the rich get richer. So with all the regulation that's come into being in the last number of years, Sarbanes-Oxley, Dodd-Frank in the US particularly, it's made it so hard to become a public company that this backdoor SPAC system has made it a little bit easier and allowed public investors to invest while the company is still private and have a say in its IPO, rather than the whole IPO system that had existed before, which I think is fundamentally flawed, maybe a subject for another program.
So considering all of this, Brendan, how reliable or volatile are SPACs? We know that interest rates are currently low, but that could change in the future.
Well, but you could say that about the stock market as a whole. You could say that about interest rates applied to real estate or any other investment. It really comes down to the deal. To say whether stocks are risky or not risky, it comes down to the company. The same with a SPAC. It's just another way of investing in a company that allows you to do something slightly different with some options like being able to get your money back if you don't like the deal, or even if you do like the deal and just want your money back, that don't exist for normal types of securities or more traditional types of securities. So SPACs are not bad in and of themselves. They have a moment because I think they're answering investor demand to get into private companies that have been, as I say, the purview of the wealthy, hedge funds and institutional investors.
All right, Brendan Caldwell from Caldwell Securities Ltd. Always great having you on Forum Daily. Thank you again for your time today.
Thanks, Nima.